Trump just sent a massive signal to AMD holders, to Nvidia holders, to MU holders, to Sndk holders, to all AI stockholders ahead of the Nvidia earnings. I want to talk about that, why we're seeing a bit of a dip right now, what this means, what we should be looking for going into tomorrow's earnings. A stock that I think is a great value, and a lot of people are missing it. They're just missing it. They write it off as an old company that's growing slowly and that has headwinds facing them. But something else from Trump's 113-page report shows me that this is a really good investment right now. It's not an AI stock. It's one of the top stocks I have that's unrelated to AI. And anyway, it's not Amazon, because I think Amazon actually is really related to AI. But yeah, it's something completely different that I haven't talked about before on the channel. I've never even mentioned it on this channel. I also want to hit on this. Micron just had some big news and signed their first 5-year customer deal. So we'll talk about that towards the end of the video. Hit subscribe so you can see future videos just like this one. And let's get into it. As we can see, the market is down right now. I don't know if this will hold, but it's not looking real good for a green day. The Nasdaq's down about 1%, just it's kind of been bleeding throughout the day, lower lows, lower highs. And we have a lot of semiconductor stocks taking a breather once again today. I mean, Micron was down 8% yesterday, down 1% today. Over the last 5 days, it's actually down 17%. Keep in mind, that was kind of the peak that it hit, that $803. And since then, yeah, down 17%. But some holders might be like, why am I down so much when the company is doing so well? At the same time, we have Sndk down over the last 5 days, about 14%, down again today. We have Broadcom just kind of staying sideways, maybe down just slightly over the last 5 days. Nvidia down about 2%, down a little bit today. AMD down 3%, down 10.4% over the last 5 days. Even Amazon, my number one stock holding, down over the last 5 days. And the market just generally taking a breather. Keep in mind, Nvidia earnings are tomorrow. This is kind of where you see some people pointing out, oh, the market's too overvalued. Like this. I saw this. How expensive is the S&P 500 right now? 4 ways to count. Price to sales is 3.5x, all-time high, higher than 2020. Price to book, 5.5x, all-time high. Forward PE, 26. This is at the 2000.com peak. Dividend yield, 1%, near a record low. Some of these numbers are just wrong. And I'll get to Micron in a second, or the signal that was given by Trump. But like some of these numbers are just wrong. The forward PE is not 26. Everywhere I've looked, and I double-checked this on Claude, we're at like a 21.4. I don't know if these are old estimates or if they're just making it up. The 5-year average on the S&P 500 is just about 20. The 10-year average is 18.9. Keep in mind, too, that that's just like the price to book or price to sales is largely irrelevant because we have very highly profitable companies. So price to sales does not show you a good representation of where the market is now versus 2020 versus 2008 because their margins are all different. What I would look at was more the price or the PEG ratio, the PE divided by the growth. If we look at forward PE, that should give us some indication of how expensive the market is because it also prices in the next 1 year of growth. But this is wrong. It's not 26. As we said, it's 21.4. And when you look at how quickly the market is growing, we have a 27.7% blended growth rate, the highest print since Q1 of 2021. This is much higher than what we typically see. Typically, we see 6 or 7%. So the market is being priced higher because we're seeing massive amounts of growth. That's how the market works. It prices in future growth. And, part of this could be like, I don't want to say a blow off top in terms of the growth, but like we can't sustain 27% earnings growth on the S&P 500. That's not normal. But also, we can continue to grow for a couple more years at high elevated rates, and the PE ratio of the S&P 500 will probably be high for that period of time. So when you look at the historical PEG ratio, I mean, you're talking about a price to earnings going forward of 21. We're talking about growth of 27%. So the PEG ratio is really low, which is really positive. That shows you that it's actually at a very good value. Historical ranges are 0.75 to 2.5. So typical, it's like 1.5 to 1.7. So we are cheap when you consider how much growth we have. And that's obvious because some of the largest companies, like the ones that we've seen blow up recently are the semiconductor stocks. Apparently they take up 19% of the S&P 500 now, and they're not expensive, a lot of them. AMD is on the higher side with like 134 PE looking at the last 12 months, but like Nvidia is at a 45, and when you look forward, all these are much cheaper, but it doesn't show me the forward on these charts. Broadcom is pretty cheap moving forward. Sndk is really cheap. MEU is very cheap, especially when you consider how quickly they're growing, right? But of course, the market is pricing in that they won't continue to grow at these rates. So actually, the companies that have gone up the most, a lot of them are some of the cheaper stocks in the market. Now, Nvidia is slightly higher in terms of the S&P. In terms of the price to earnings ratio going forward, it's still at 25. It's a little bit more expensive than the average company in the S&P 500, but MEU and Sndk are $1 trillion, right, between the two of them, and they're at like 7 forward price to earnings ratio. So just kind of interesting. Don't let people throw you off with these scary comments saying that we are at like bubble levels, because it's misleading a lot of the time. I think the reason that we're seeing the market just down in general today, we have the 30-year note rising 5.2%, the highest level since 2007. This is because the war in Iran doesn't seem to be getting better. We have high inflation from that, and this is causing treasury notes to rise, which makes stocks less attractive. And it means that we could actually see a raise in rates later this year. And it's not just stocks that are being affected too. Don't feel down. We have gold down 1.8%, silver down 4.4%, Bitcoin down 5 days in a row. So it's not surprising that these companies, Amazon, AMD, Nvidia, MEU, Sndk, Broadcom, are all down ahead of Nvidia earnings tomorrow. And I throw Amazon in there too, because I think of them as like the company that will benefit the most out of the the major hyperscalers like Microsoft, Amazon, Meta, the one that will benefit the most from AI. Now, let's talk about something interesting. Actually, not this yet. We'll get to that in a minute. Trump sent a major signal to Nvidia holders, AMD holders, all the AI holders, because he actually has a very significant position and bought a significant amount of a lot of these AI companies. We just got that 113-page filing last week, and he holds $6 million of Nvidia. It might even be more than that, because sometimes these are wrong and don't show everything. Oracle, now Adobe, AVGO, $3 million each, which is interesting because some of these are AI, some of them are software. So like those almost usually go against each other. When someone's buying AI, they often don't think that software will do well, and vice versa. But he's betting on both of them, maybe because software is cheap, but he also believes in AI, kind of maybe a hedge there. I'm not sure. But yeah, he scaled out of the major hyperscalers like the Microsoft, Amazon, Meta, Googles of the world. Some of this was, I think, for tax reasons. He sold some and then rebought, but he went heavily on a lot of the more pure plays in the AI sector. Now, I think it's very important to remember, like, this is a signal that he's giving, that he feels very strongly that these are going to do well, right? Or his estate, whoever's running this money for him. Some, I think he does, and then someone else does. But this is the first president that we've seen that has been so active in the stock market while making major decisions for the country. So he's giving a major signal that he thinks that this will continue, right? That these companies are going to do well. The one thing that I'd be careful of, these are delayed. Like, people look at these and think, oh, well, this means that Trump hates Microsoft and hates Amazon and Meta and Google, and he's not bullish on those, but he's bullish on these, the ones they added. Keep in mind, these are 45 days late. So he could have, trimmed positions for tax reasons. He could have trimmed because he, is going heavier into the major AI companies now, and then we'll go back into maybe some of the larger, some of the other large companies like Microsoft, Amazon. I don't even know what to call them. Mega caps, Mag 7, non-AI, like direct AI stocks, the hyperscalers, whatever you want to call them. He still has VOO, which is a huge bet on, Microsoft, Amazon, Meta, Google. It's still, those are some of the largest holdings. So I don't think he's bearish on these companies, but he's trimming positions and going even heavier into AI. So that's the major signal. He's not sitting there saying these stocks are overvalued or I need to get out of the market completely. No, he continues to buy US companies, even when they're so up so significantly over the last year. So I think that's generally a good thing to see, right? If he had just sold out all his positions, that would be quite bearish, but he didn't do that. Keep in mind, it is delayed, but yeah, it is a signal to the market. Now, I saw something interesting. I saw this graphic on Trump and like what his positions show after the recent 113-page report. I think, a lot of people just take this for face value when they see it on Twitter, but a lot of the time these are misleading. Like they're not actually right. So I want to double check because there was one thing that stood out to me, something that he's been fighting against. It's actually hurt the stock price of these companies, but they're on this circle for something they own. So I double checked, and Mastercard and Visa are held by Trump. Now, why do I bring them up specifically? Well, Mastercard is a company that I own a significant amount of. It's not as large a holding as Amazon, but I hold a significant amount, and they're down 10% this year, 12% over the last 1 year, while their fundamentals have gotten stronger. Their revenue growth, their earnings per share, everything looks up and to the right for them, but they're usually a company that trades at about a 35 PE ratio, I'd say on average. They're down at 29 right now, which might not sound like a lot, but with it being down basically 20% below its typical price to earnings ratio, and with them still growing earnings per share by about 20%, this is a good time to buy, in my opinion. And I've been buying over the last year. Now, one of the major reasons it's down over the last year is because of Trump. He actually spearheaded this, the Credit Card Competition Act. It proposed a 10% rate cap on credit cards and also limits how many people can get them. Now, I didn't think this was a very likely thing to pass. I think, first of all, it would be very hard to do this with the major banks making most of the money from credit card transactions. A lot of people don't know this, but Mastercard and Visa only get a very small percentage of that, like 2 to 4% fee. I think on average they get about 0.1% of the 3 or 4% fee. Most of it goes to the banks. So I think it would be very hard when banks hold so much power in Washington to get this to pass. Also, I think people would have to depend on other means of credit, which could actually be worse, like higher interest rates, more dangerous than a credit card. So I thought this was a good time to buy something like Mastercard. And a lot of people don't realize a lot of Mastercard's business isn't even just like the 2 or 3% fees. They've been expanding their business in a lot of different ways. So I look at this, and this is a company that consistently grows. It's grown for decades and decades and decades, and is a pretty safe company, I'd say. Grows faster than the S&P 500 on average. Is totally unrelated to AI. So if you wanted something that wasn't exposed to AI, they're not spending like massive amounts on CapEx or anything like that. They're just a really highly profitable company, buying back shares, issuing dividends. This is a good time to buy it. And it's interesting that, Trump is spearheading this act that could limit credit card rates and could negatively affect Mastercard and Visa, but yet he still owns the stock. I think this makes it even less likely to go through. So I just wanted to point that out because I like this company and I just found that out today. So it makes me even more bullish. Now, we have Nvidia's earnings tomorrow. That could really affect, all these AI companies. Everyone will be looking to see what kind of demand Nvidia has because that will give them an indication for maybe what the smaller, like the memory companies and some of the other stocks will have. Jensen's for guidance and just his overall tone is going to be looked at with a microscope, and it should be a very interesting call, I think. Micron and Sndk and some of these other companies have gone pounded over the last day or two. Keep in mind, this is after a 100% run. So like year to date with a stock being up 100%, don't be surprised if it falls down 15, 20, 30, 40%. It would have to fall down 50% to get back to, well, it ran even more than 100%, ran like 150. So even with this 15% dip, it's still up over 100% this year. The underlying company is still doing quite well, but yeah, it can see short-term headwinds in terms of price, especially ahead of a very important earnings. They just went from an 8 PE down to a 7 PE looking at the next 12 months. So yeah, it's still cheap, to be clear. Cheap can get cheaper, expensive can get more expensive. But yeah, when you just look at their price to earnings and their growth, it is quite cheap. But again, the market is pricing in that it's quite cyclical, that they're not going to be able to hold these kinds of margins. So that's why I think Nvidia's call tomorrow will be very interesting, will be very important for the market. So be ready for lots of volatility. All right, Micron ramped their forward year 2026 capex to $25 billion and signs their first 5-year customer deal. So we're just talking about how they're getting cheaper, but Micron is riding the AI memory upcycle, delivering strong second quarter 2026 results and guiding third-year revenue above market expectations. Even more striking, the company flagged a major step up in capital intensity with capex to exceed $25 billion this year and climb further in 2027 as manufacturing expansion accelerates, according to Reuters. Now, this is higher than the market expected. They also said that they signed their first 5-year strategic customer agreement and is actively in talks with multiple customers, signaling growing traction for longer-term supply models that complement the company's aggressive expansion. So they invested $13.8 billion in capex for this year, talk about doubling it. Now, I think this is really positive. This shows that, they see more demand coming in the future. They wouldn't be scaling up capex so aggressively unless they saw a real need for it, right? So last quarter, they're at $6 billion in capex, kind of giving an indication already that they're going to hit $25 billion this year. But that 5-year agreement, I think, is a really positive thing. A lot of people don't realize this. In the past, Micron hasn't had as much pricing power, right? A lot of these memory suppliers haven't. But they've been through this before. And they're making people sign 3-year deals. The major companies sign 3-year deals to get their business. Now they're maybe even upping them to 5 years. Not maybe, they are upping them to 5 years, as we just read. So I think this is positive overall for Micron and SanDisk and some of these other companies. It shows you how much power they have right now and how needed they are. Of course, we already know that when you see a company that's gonna 10x their profit in a year, they're having a massive boom and have pricing power. But of course, this is being priced into the market, so just keep that in mind. Ahead of the earnings tomorrow, the Nvidia earnings, anything can happen. There's going to be lots of volatility, but I want to point that news out because I do think it is a positive overall development for Micron and some of these AI companies. Let me know your thoughts on this underneath the video. Let me know if you're doing anything ahead of Nvidia earnings, and I'll see you all in the next one. Just a reminder, this is not financial advice. This is not legal advice. Do your own research. I'm never going to reach out to you either in the comment section or through any other means to try to get you to invest in something that I'm investing in or to send me crypto. Some links underneath the video are affiliate links. I may earn a commission, but this is at no extra cost to you. Of course, do your own due diligence.